All right then, good morning everyone as we head into European trade on Thursday, the 2nd of May. Now, obviously we had the Fed last night and it's a bit I think maybe a bit of a tricky one when it comes to the Fed from last night. I mean, you can see here Powell's soothing tone may not be enough for inflation spooked markets. He did kind of push back on the prospect of rate hikes, but then said I mean, they don't know when we're going to cut interest rates. Pretty much said to us that the next move is going to be a cut, but when that happens is a completely different question. Inflation has fallen, which is something we all know over the past year, but certainly over the course of Q1, that is not the case. Inflation has not fallen over the course of Q1. Inflation has risen over the course of Q1. He still believes it will come down through the back end, through the second half, and then through the back end of this year. But if the first quarter is anything to go by, it's not really coming down the way they want it to come down. So, I mean, what do you do? We kind of backtracks on interest rate cuts, and then you kind of or just patience on rate cuts. What that kind of means going forward is a bit difficult to predict. It would seem, and yeah, I mean Japanese intervention again last night. Obviously, they come out with or see a somewhat dovish Fed, and then go in and intervene, kind of jump on board with a bit of dollar weakness and then sell obviously a bunch more dollar yen and then yeah, push the price of dollar yen lower. But apart from that, that's really all we got to go off. I mean, you can come across to the charts or come and look at the markets. I think pricing for markets is not something we can really go off this morning. We'll jump over some actual charts in a minute, but you can see equity futures slightly higher, European equity futures mixed, Asia Pacific equity futures mixed, commodities mixed, bond yields higher in the US, but got whacked yesterday, so not too much to see there. The US dollar relatively bearish, and you come on to the other currencies, the Japanese yen down across the board, but that's just a bit of a pullback from yesterday's moves. But I think it's best we just go straight onto the charts and just have a look. And this is kind of where your technicals come in, right? Your technicals come in and guide you, and ultimately we're still kind of no different on the technical picture. You can see your Aussie, you got this trend line, you got this resistance level up here at kind of 65.80. Until we're through that, I'd struggle to be too confident about broad-based dollar downside. You then come to, well, not just off the Aussie obviously, but then you look at the Kiwi, you're below resistance here on the Kiwi. You got a trend line up there on euro dollar, still below resistance on euro dollar. Cable, you're up here at this trend line. It's a daily trend line, so relatively significant. You've got dollar Swiss. You've got a bit of a trend line here. You've rejected off 91 this morning, but then you've got Swiss inflation, which we'll have a look at in a minute. You've got dollar CAD. Dollar CAD's been pretty range bound. You got that trend line up there. Obviously, that's a bit of dollar strength. But what I'd go off, have a look to the downside is probably something like this. But again, we're a fair bit away from that. So, to go and just pile into any going and just pile into any shorts on dollar CAD. Not really much has changed in terms of significant price levels. The one that is true a level is true dollar yen. And come back to this, we are through that 155 that we struggled to break, although we're back inside it now, and this trend line has kind of been breached. But clear intervention from the Bank of Japan again last night. Dollar yen was 450 pips lower post Fed from last night, so it would make sense they would try and jump on board with a bit of US dollar weakness. Obviously, if they any dollar weakness, they will want to jump on in order to get dollar yen down, get Japanese yen propped up a bit. But at the end of the day, it hasn't really changed too much. I don't think. Still doesn't change the situation in the country. You have a look at equity markets. Equity markets a bit all over the place. They spiked higher and then straight back lower post Fed yesterday. You can see the 7 o'clock candle straight up, 8 o'clock candle straight down, and that is consistent across all the equity markets. You then look at bond yields. Your 2-year yield back down below 5%. 10-year yield kind of lower than back higher, then has grinded lower again. So markets just a bit undecided as to what they want to do, to where they want to go in today's session so far. Gold has had a bit of a bounce back, kind of not what we were hoping for yesterday, but not what the majority of markets are hoping for. But gold pulled back, and now it's heading back lower a bit again. So what we do in terms of this is a little bit undecided. We can have a look towards NFP tomorrow for some direction, but ultimately he said at some point over his press conference yesterday that a slight weakness in the labour market isn't going to change their thinking too much. They would have to see significant weakness in the labour market in order for that to be a case for them to go and cut interest rates. So it's all just down to inflation, and it's kind of onto April CPI when we get it in the first week or two of May. So obviously we're in the first week or two of May, and we'll have to see how that pans out when we get to it. And we'll look across the next week. We don't have it next week, the week after. So kind of in a bit of I think we're kind of in a bit of no man's land for a week or two. This is then where technicals come in and guide us. If we start breaking levels and the markets start to show broad-based deterioration in the US dollar, well, then that gives us our indication as to how markets are reacting. But the fact that they've taken rate hikes off the table, the US dollar is pretty bid across the board in terms of pricing. Balance of probabilities, you'd probably look for dollar downside off the back of it. But again, they haven't suggested anything about rate cuts. They said, they've not clarified whether we are actually going to get rate cuts this year. The idea is that we probably will, but inflation continues to remain too high. That every time inflation remains too high, it pushes the prospect of interest rate cuts back. And that's what we got to look at throughout the rest of throughout the next number of months. So kind of what that means at this point is a little bit unclear. I'm not sure I'd go piling into any positions first thing this morning. Trading may be a little bit difficult until markets kind of work out what to do, and certainly till I work out what to do, that kind of means you got to stay on the sidelines. So we'll see how markets react today. Do equities continue lower? We've got Apple earnings after the close today, which we will keep a keen eye on as we head into NFP tomorrow. But we'll see how that pans out. Apple earnings today, NFP tomorrow, probably give us some direction. Although NFP, slight weakness in the labour market isn't going to change too much, but weak labour market probably means weak dollars, and that may potentially provide a tradable opportunity. So what all that last night means for markets now is a little bit unclear. Maybe that's what Jerome Powell wanted, but for now I wouldn't go piling into any positions. Let's take a minute to try and figure this out, figure out what to do, and then we'll be back with some further updates.